Well, joining us is Sarge. He's a contributor at The Street Pro. I hear you come bearing gifts today with your single best trade. What is it?
Well, I'll tell you what I'm willing to buy for myself, for my children, and my grandchildren is Palantir Technologies. PLTR for the folks at home.
For the folks at home, they may not know what that company does, so tell us.
It's kind of difficult to explain. They're a big data software company that's been really a contractor to the US government from their beginnings. Now they're spreading into the corporate side, the commercial side. Their customer count is growing like a weed. I think it grew something like 69% year over year last quarter. Their revenues are growing a little more slowly. My thinking is that the revenues are going to catch up to the customer count, not the other way around. It might take a little while. If you look at the stock's chart, you might even see, for those of you that can see these things, a descending triangle, which would be a little bit bearish. But that's okay because there's a gap down to about $19. That's where the gap fills. You've seen me buying it because I tell you all you folks in my articles when I'm buying it. That's where I expect to buy to get aggressive. I expect that gap to fill. I expect to load up around 19 and maybe not take off, but take off by the time my children and my grandchildren are a little bit older.
Captivating, intense, and thriller, Palantir Technologies Incorporated has been blazing through the search charts on Zacks.com, becoming a focal point for eager investors. In the past month, Palantir's shares have taken a surprising 4.6% dip, starkly contrasting with the Zacks S&P 500 Composite's 4% gain. Yet, the Zacks technology services industry, which counts Palantir among its ranks, has surged by 5.9%. Beyond these immediate gyrations lies the crux of the matter, which is the fundamental factors driving long-term investment decisions. Is Palantir poised for a meteoric rise, or is it headed for turbulent times?
So why do you like this stock?
It's because its demand for what it does, I believe, is going to be inelastic. All right, they provide security, they provide surveillance, they provide big data analysis at a level that really only the CEO, Alex Karp, can explain effectively. I believe that they are well ahead of other software providers, of other big data providers on the AI side. And as long as they can maintain that lead, or at least keep the pace up. I mean, you all seen what Dan Ives has said about this stock. He's raved about this stock. Not that Dan's always right, but he's right a lot. He's a 5-star analyst at SIP ranks for a good reason. And I have a lot of the same feelings for this stock as he does.
Conway Gittins and Stephen Guilfoyle recently had an interesting discussion about Palantir's future. The conversation intensified as they delved into the company's prospects. Guilfoyle, fueled by unwavering conviction, unveils the allure of Palantir stock, painting a portrait of resilience amidst the tumultuous seas of market uncertainty. Guilfoyle also passionately praises Palantir's strong demand, highlighting its top-notch security, surveillance, and advanced big data analysis. Strengthened by Palantir's robust fundamentals, Guilfoyle champions its steadfast profitability, buoyed by a pristine balance sheet and positive cash flows. However, there is significant concern about valuation risk, which raises doubts about the stock's high goals. Despite the cautious warnings from other Wall Street analysts, Guilfoyle remains firm in his belief that Palantir will rise to market greatness. Despite his bullish outlook, Guilfoyle sees potential risks ahead due to Palantir's dependence on government spending. He recognizes the risks and remains cautious amidst the optimism. But despite Palantir's challenges, Guilfoyle trusts in Palantir's tech strength and innovation to see it through. He's confident the company can weather any storm ahead. In uncertain markets, Guilfoyle's confidence in Palantir offers reassurance to investors navigating through doubts. His steadfast belief serves as a guiding light through challenging times.
So that being said, I mean, we're looking at Palantir. That's the first name on your chart here. And 1 year, it's done well, but it really sort of was trading in somewhat of a range the first part, and then February moved higher, and then has been in a new range. Some of your thoughts about why where this could be headed and why?
Yeah, so we talked about the AI trade. The hardware names have been the first leaders in it. The NVIDIAs of the world have just taken off and taken the world by storm. I think the next wave is going to be the software names. This is a name I've been following for a while. You know, it's had a fantastic year. If you look at a big picture, up from 16 and a quarter to start the year to over 20 where we are now. That's not too shabby. You know, that said, we were at a high of 27 plus. We've come off of that since then. So it's been challenging. It's been consolidating here, but I still think it's a fantastic long-term hold. You go back and look at last year, we were kind of in a channel, maybe 16 to 20, broke out of that channel, and now we've been consolidating after that first quarter earnings here above 20. I think that's fine for the long-term story of this stock. I'm happy as long as it's still above 20. I think this is a buying opportunity now that it's come back down to this lower end of the range.
Moving to the other side of the page, for the current quarter, Palantir is expected to post earnings of 8 cents per share, an astounding 60% surge from the same quarter last year. In a dramatic turn, the Zacks consensus estimate has skyrocketed by 19.1% in just the past 30 days. Zooming out to the full fiscal year, the consensus earnings estimate stands at an impressive 33 cents, marking a remarkable 32% year-over-year increase. Additionally, this estimate has seen a striking 3.7% rise in the last month alone. Looking ahead to the next fiscal year, the estimate leaps to 40 cents, a significant 20.8% jump from what Palantir is projected to report this year. This bullish estimate has remained rock solid over the past month, reflecting unwavering confidence in Palantir's future prospects. Earnings growth is a critical indicator of financial health, but it's nothing without robust revenue growth. Palantir's consensus sales estimate for the current quarter is staggering, around $652 million, marking a 22.3% year-over-year increase. Looking further ahead, estimates for the current fiscal year stand at a formidable $2.7 billion. The estimates rise to an impressive amount of a little over $3 billion for the next fiscal year, reflecting growth rates of 21.6% and 21.2%, respectively. In its most recent quarter, Palantir posted revenues of around $634 million, marking a significant 20.8% year-over-year increase. The company also reported an EPS of 8 cents, up from 5 cents the previous year. This performance shattered the Zacks consensus estimate of $614 million by 3.16%, although the EPS merely matched expectations. Despite the shadow of uncertainty surrounding the fate of the Seeing Stones, Palantir has embarked on an extraordinary trajectory since its IPO in 2020. This journey has seen the company rise to prominence in the big data industry, defying expectations and captivating investors along the way. In a breathtaking ascent, Palantir's stock has skyrocketed by 128.37% over the past 4 years. This year alone, the stock has surged an impressive 26.72%, reaching a remarkable of around $21 today. However, over the past 4 quarters, Palantir's track record has been a roller coaster. The company exceeded EPS estimates only once, but it consistently outperformed revenue estimates 3 times, demonstrating its potential to surprise and deliver. In its relentless pursuit of deciphering Palantir's future fate, Finbold delved into an intense clash between traditional wisdom and cutting-edge artificial intelligence. Expert price targets clashed with the insights of OpenAI's formidable ChatGPT-4, igniting a fierce debate about Palantir's destiny. The verdict? First, let me introduce today's sponsor, Moomoo, the only platform you need to beef up your Palantir stock trading strategy. Moomoo's financial analysis presents a visual page of a company's net profit growth, cash flow, and dividend situation, helping you identify stable and profitable companies. It also provides dividend statistics and records, displaying dividend growth and dividend yield growth, which help you select high dividend stocks that have had stable and continuous growth. Furthermore, Moomoo's dividend calendar supports subscriptions, allowing you to quickly lock in dividend information and hold stocks before the ex-dividend date, making it easier for investors to take advantage of potential trading opportunities. Covered call strategy on Moomoo buys 100 shares of a stock and then sells corresponding higher strike price call options in the underlying stock without a complicated process. This strategy helps you generate income through premiums and provide coverage in case the option is assigned. Additionally, Moomoo's DRIP automatically reinvests the corresponding dividend income into the corresponding high dividend stocks, allowing effective utilization of compound interest to expand your income. Furthermore, Moomoo is one of the lowest cost trading platforms with zero commission for stocks, options, and ETFs, and its fees are one of the lowest compared with other brokers. If you're a new user, sign up using our link and make a deposit to receive up to 15 free stocks, along with an 8.1% limited time APY on idle cash and a transfer-in bonus of up to $300. Don't miss out on these rewards. To make it simple, go ahead and just scan this QR code on your screen to get your 8.1% annual percentage yield only from Moomoo. So, back to the verdict. Analysts tread cautiously, painting a picture of uncertainty in the coming weeks. Palantir hovers in hold territory amidst a tense standoff between buy and sell ratings. Their average price target of $21.23, a mere 1.07% above its current price, exposes the market's nerves. In contrast, ChatGPT emerges as the bold visionary, aligning with the bullish outliers, predicting a meteoric rise to between $30 and $35. Unfazed by conventional wisdom, the artificial intelligence champions Palantir's relentless innovation, robust performance, and relentless expansion as catalysts for its ascent. The battleground intensifies with Wedbush's Dan Ives and RBC Capital, embodying the extremes of optimism and caution. Ives' audacious $35 price target clashes with RBC's cautious $9 forecast, marking the fierce dichotomy gripping Palantir's fate. ChatGPT stands defiantly bullish, setting the stakes higher with an audacious $45 upper bound and a daring $10 lower bound. As ChatGPT was asked, it delineates singular targets within these boundaries, and $32 emerges as the pinnacle of possibility. On the other hand, $43 represents bold optimism, and $13 embodies prudent skepticism. These targets encapsulate the spectrum of potential outcomes, from the lofty heights of bullish fervor to the cautious depths of skepticism. Despite the looming valuation risks, the potential for long-term gains driven by Palantir's robust earnings and revenue growth is undeniable. Wall Street veterans and some other investors are rallying behind this stock, seeing it as a compelling bet for the future. As the battle for Palantir's future rages on, only time will reveal whose predictions will prevail in this high-stakes duel of forecasts. Our question for you would be, will you take the plunge as an opportunity to buy more Palantir shares? Share your insights in the comments below. If you enjoyed this video, you may also like our hand-picked, action-packed newsletter about Palantir. Subscribe now at wiseinvesting.com. Go ahead and scan this QR code now to subscribe. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you want to know about Palantir stock, just click this video right here. Thank you for tuning in, and stay tuned for more exciting content in the future.